Tuesday, episode 69, and you've got it here first. It was complete manipulation of the market today. I'm going to tell you how. Okay? So there was sell-off in lieu of the Fed talking tomorrow, right? That's what everybody was thinking. But let me remind you guys, we had 5 straight green days. Preceding that were 5 straight red days. So we had 5 straight red days, which we had last Monday, that big capitulation down like 800 points, right? Then we had 5 straight green days. Nothing goes straight up. So what happened? There was profit taking, okay? So that's what the sell-off was. It was consolidation, okay? The analysts, the institutions, here's what they're telling you. They're telling you the market's going to fall off a cliff, that you should sell all your positions. Make sure you're selling people, right? The government doesn't help, all right? They talk about spikes in the virus. They're instilling fear in the marketplace. But the institutions are telling you they're expecting a market dip. All those guys on CNBC, right? Yeah, we're expecting the market to dip 10, 15%. But how come the market still hits new highs, okay? Every day or every other day, it's hitting new highs. And if your stocks aren't hitting new highs, then you're probably in the wrong stocks. So here it is. I had the light bulb moment today. I have a little bit of FOMO in the morning. I'm not going to lie. I have money set on the side. I know the rules say we don't buy options until 10:30. I see a mega dip in something and I'm like, oh, it's on sale. It's on sale. I'm going to buy it. I'm going to buy it. Then when I buy it, I announce it. Some people get in. Some people wait. We're watching this one stock. But what we're not doing is paying attention to the market. All right, so I had the light bulb moment today because we have a private section for lifetime members, okay? We have a new platform out, which is great. It's Spaces by Wix, all right? Everybody can see my corner. Everybody else can post whatever they want about whatever stocks they want, and there are continuous chains, which is great. We have a lifetime section as well for the lifetime members. They have their own chat. So this morning, the market was getting beat up, and they're all securing 20% here, 30% here, 40% here, and I'm like, light bulb moment. Let me explain what they are doing to the rest of the members, because we have 1,000 members in one area and 50 to 80 members in another area. Okay, so the 50 to 80 members are talking back and forth and sharing ideas. Oh, I think this is going to fall. The market looks terrible, blah, 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 blah. I never jump in. The only time I jumped in today was when the SPY was at 436.50. All right. And people were saying they have SPY puts and they expect the SPY to go down. And I didn't expect the SPY to go down. I expected the SPY, which is the direction of the market. Okay. So that was my other light bulb moment, but I'll explain. I thought it was going to 438. It actually closed at like 438.50. Strong end of the day buying. So that sets up tomorrow for a good morning. It sets it up. I'm not promising anything, but off of the close, I would tell you tomorrow morning would be good. The light bulb moment was, if I don't talk about any stocks or positions and I'm just giving you guys lessons and telling you about the market, and I wait until 1 o'clock, 2 o'clock when we see a direction of the market, and I can tell you guys, because the market was off like 290 and 190, and I said I expect that to be cut in half, that they're to be buying at the end of the day. So I was correct about that. So for anybody that didn't make money, I understand you're struggling, okay? But the light bulb moment went off, and I know how we're going to fix it. We're going to play puts and calls on the SPY. We're going to keep it simple. They expire Wednesdays and Fridays. As long as we call the market direction, you can hold overnight. At 2 p.m., if we went long on the SPY, you'd hold until tomorrow. We'd be up like 40, 50, 60%. I think actually 62%. I don't want to get carried away. Okay, so I wanted to add in my 2 cents, right? We're talking about the direction of the market. Gotcha. Oh, at 10:30, 10:45 this morning, I did go on public Twitter, right? Because our system was down. I went on public Twitter and I said, the market could get a lot uglier. Be very cautious, okay? So it did not surprise me that we went from like down 100 points to basically double that, down 200, 220 for the Dow and close to down 300, or it was actually over 300 for tech. So it didn't surprise me. But it didn't surprise me that the UVX went down at the end of the day. There was buying at the end of the day. So what happens is the institutions, the hedge funds, they instill fear in you. You guys scare sell, right? You take the loss. You sell your position at the low. Who do you think is supporting the market and putting the market at all-time highs? The same people who are telling you to sell your stock. Okay, so that's real quick. And I can just point that out by the UVXY. I mentioned my position this morning and what I did. And here's how I entered in the UVXY, okay? It was spiking, so it was $30.57. I bought 12 contracts. Keep in mind, I usually buy between 200 and 300 contracts when it's the UVXY. Okay, I spent about $30,000 to $38,000. Today I spent $36,743. Okay. Sorry. I know numbers. I'm good with numbers. So on the way up, 30.57. It's going up. It spiked to like 31 something. I bought 12 contracts. When it went up higher to 31.18, okay, because that's me dipping my foot in, I bought 40 more contracts. So now I have 52. I still look like I was going to be incorrect. It spiked even harder to 31.53. It might even spiked harder than that, but I bought 190 contracts. And in between, when it was doing this, I bought 49 contracts sporadically. Like I would see the UVXY spike and I'd be like, okay, buy 5 contracts. Point is, I said it was going to go down at the end of the day, $30.30. How are you so sure? Because I know there's manipulation in the market. So if you're just logging in now, 5 minutes in, go back, rewind. All right. The market was heavily manipulated today. People are anticipating the Fed talking tomorrow. COVID spiking, cases are spiking. People are selling off. No, it was profit taking today. And then it was facilitated, or it was exacerbated by the retail trader selling their positions. Okay, I actually bought 2 positions today, which I alerted, and I'll give it real quick, and then I'll finish up my UVXY story because I got sidetracked. But I doubled down, or I bought a second and third position for Blink, BLNK. It was at like 31.90 something, and I was like, I'll buy 200 more shares. I'll take my average down. I had waited months to do that. All right, I also did that with Roblox. I believe it was 71.90 something, and it's $72. I bought more shares of Roblox. Take my average down. When Roblox closed at 76, right? Something like that. So it's up $4 from when I bought it. I'm so close to breaking even again that I know when Roblox explodes, and it's on the spreadsheet. If you're part of my platform, you get the spreadsheet. Okay, back to the UVXY. So I was buying a couple stocks. I wasn't going crazy because the market could still get sick on itself. Volume wasn't so, heavy today. So again, my UVXY position, I had like 280 or 90 contracts. I tested the water to start, all right, making sure I'd be correct. When I wasn't correct, I bought 40 more contracts. When I wasn't correct, I bought 190 more contracts, all right, because I knew the UVXY would go down unless the markets. So here's the catch. If the markets threw up on themselves and the markets were down like 1,000 points and 800 points, like last Monday, okay, then the UVXY would spike another 20% or something like that. So how did I know that was going to happen? Psychology of trading. Again, I knew today was consolidation. We had 5 straight green days. All right. Before that, we had 5 straight red days. So there's a pattern forming. 5 red days. Then we had 5 green days. Okay. Today obviously wasn't a green day. It consolidated. Profit taking. Nothing goes straight up. So I said that. Okay. So let me talk about my other positions, because if you saw me on YouTube, you're like, oh, what about this stock you were talking about yesterday? What about this? So WDC, which I gave my alert, my average was 74 cents. Here's the catch. I understand. I had that in my Robinhood account, right? So it opened up, I think maybe like 80 or 79 cents, but real quick. I was hoping it was going to go up. It didn't go up. I realized 2 minutes into the market day when I saw Micron and I saw Seagate and I saw Microchip, and there was one other company that's a chip-related company. So when I saw them going down, I'm like, shit, WDC is going to go down as well. Let me get out. So I put in for like, what did I put in? For 60 cents. It was going down. I'm like, all right, the bid ask, I put in the middle. It was like 58 and 62 cents. I put in 60 cents, $60 a contract. I would take a 20% loss. It didn't sell. I'm like, what? How did it not execute? Okay, I'll put in 58 cents. Didn't sell. I put in 56 cents. Didn't sell. I'm like, screw this. 53 cents, $53 a contract, and I was out, okay? I understand it went to 23, maybe 17, maybe it bounced up to 25. I'm pretty sure I bet my life on that it's under 53 cents per contract. The point was, when I saw it going down, I got out, okay? Knowing that when it hit the bottom, I bought 3 contracts with a $61 strike, and then actually I think it closed at like 62.36. So actually, I'm making some good money on those 3 contracts. Let's remember, I only had I think 6 contracts on the way down. I don't remember. I have to check the spreadsheet. What else? IGT, okay? International Game Technologies, okay? I still like it, and it finished today at like 1988 or something to that extent, which is great because it was down at 1940. The point was, when it was at $20, I said I'm going to exit out of my position. I was up about 17%. I took a 10% profit on that, and I got out. Why? Because I thought the markets might throw up on themselves, and if they did, the stock would go down, and my position would turn negative 20%. So it's better to secure the 10% profit than to watch it go down. I spoke to one of you today who had puts in the SPY, even though I said the SPY was going higher, and the SPY went higher for the last 2 hours of the day. The person said, my entry into my puts was so good. That just doesn't make sense to me. You have puts, it's going down in value, okay? It's becoming less valuable. You would sell them, and if you like the position, tomorrow morning you could buy that shit 20% cheaper. 15% cheaper. I don't care. It's going to be cheaper. Do you understand? We're here to make money. We're not here to watch the market. I just still understand that. Okay, so that was my WDC position. So I bought 3 STX contracts. When it dipped, it was under 84. It was like 83, 88. I bought 3 contracts. STX finished, I think, above $85. Okay, so the other chip maker. That's the industry I like. So when you hear me talking about stocks going forward, I'm probably going to mention the same stocks over and over again. There's probably going to be 3 of them. Actually 4 of them. I'm looking at AMD, which you don't hear me talk about. I'm looking at Micron MU, which you don't hear me talk about. STX, which you do hear me talk about. And now WDC, which you're going to hear me talk about. Because again, I think it was consolidation today. All right. So what else? I mentioned that. Oh, the lessons for today. Here we go. So you have to have, and I just spoke about it, you have to have an active trading strategy, which means you have 2 game plans. If you just buy something and you hold it, you're not trading. So when someone says, are you a day trader? You should really answer them no, because you're not, all right? You need to have an active mind with 2 ideas, like chess, all right? One position is, I'm going to buy this. It goes up, and here's where I'm going to exit out of, okay? I bought this at $80 a share, an option contract. I'm going to sell it at $100. I'm going to make 25%. That's one strategy, okay? Your other strategy is, I'm in this $80 contract. It's going down. It loses 40%, so it's down $32. It's at 58 cents. You say to yourself, I will buy more at 50, okay? If it goes to 50, I'll buy 2 more. So you're in at 80. You buy 2 more because it dips down to 49 because the market throws up, and then it spikes up to maybe like 70 at the end of the day, okay? So you bought 1 at 80, 2 at 50, okay? So you're in for $1.80 altogether. You have 3 contracts, so your average is 60. So when I said it spiked at the end of the day to 70, where you'd still be down from your initial position, you're up if you do things the right way. So again, I tell my members, and I made a posting this morning, you don't have to follow me in the positions. You could take the complete opposite position, and I bet we both can make money because you're following the rules. One of us is going to make 40% right off the bat. So if I buy a put and a call, if the call drops, the put's going to make 40%. Boom, I'm out with 40% profit. Now I know what to do with the call because I was so sure the stock was going to go up. So the point is, you don't have to enter into my position. I say I like those stocks. You could say, oh, this guy's a joke. I'm going to go the opposite way. The good news is, if you use my strategy and my theory about averaging down at certain points, and you're basically correct about the direction, you're going to secure a profit. So that's the point. What other positions do I want to talk about? No positions. Let's get to some slides, and then I'll get to some questions. I want to speed through this today. Okay. Oh, this is great. So there are a lot of new members to my platform. There are a lot of misconceptions, just like options are difficult. That's just not true. Okay, so another misconception is you need a lot of money to trade with Matt. Oh, you got to have just ducats of money and rolls, and it's not true. People that came to my platform had less than $100, okay? You watch how we trade. The point is, you watch me speak about the market. You watch me speak about the down times or the up times. You wait till I say something like, I expect a strong rebound at 2 p.m. today. In fact, I said 2:20, and then when it happened at like 2:10 p.m., I said I was 10 minutes off, okay? But there was a strong rebound. That's when the institutions were buying. That's when I knew they were. So the point is, you wait. You enter into a position, you get a spike. You can either day trade or hold overnight. It was your third option trade, and you made 60%, which I know for a new trader. And I'm not saying there are only new traders that follow me. There are very experienced financial people that follow me. But the point is, for a new trader, making 60% on a trade, okay, when you're used to watching your stock and your stock's probably going down 2%, 5%, 4%, it doesn't matter. I just love that. Okay, next slide, please. Oh, let's go through them a little quicker because I forgot I have a couple slides. All right, so Snap the other day, when I alerted Snap was only up like, 16% pre-market, and it could go to like 25%. Boom, someone followed my rule of thumb, got in. Again, the option expires July 30th, so they had more than enough time, but they sold. 64% is pretty damn good. Next one. So then we have two positions that return 64%. This person, oh, yeah, finally making this work consistently. So this is his average for that one day. It was like 91%. The point is, when you follow the rules, you see returns. And anybody that followed the rules today, okay? And I'll point out, let's get off slides for 1 second, Carlos. I'm going to come right back to me. Anybody that averaged down, let's say WDC, you got hurt this morning and you sold when it was going down. You got like 40 cents and you put in, let's say, 80 cents or even 62 because that was where people bought it. 62, let's say you got out at 31. You lost half your money, okay? You're down 50%. You put in $1,000 bucks. So you're down 500, okay? Now here's what I told you to do. When it bottoms today, and I called the bottom too soon. I called it at 61.30 and then it went to 61. So this is great. Anybody that uses, and now it's above 62. The point is, I called it too early. But let's say you average down when I said that was the bottom, okay? And it wasn't because it went down harder. So anybody that said, Matt's wrong again, 10-minute rule, it's going down. The point is, you use double the amount of money. So you were in originally for $1,000. You're down $500, okay? That's enough said. That's on the side. It has nothing to do. So you take $2,000, which is double your initial position. You put it in when the stock was 61.34. All right? I know it dipped. So you were down like 20% on your new position. You were already down 200. And then what happened is it bounced at the end of the day like Matt said it was, right? So yeah, WDC, same stock, same options. End of the day, it got the bounce. So your $2,000, which made 30%, makes you $600 in that position, okay? So you're up 600 on your new position. Your first position, you got a little bounce at the end of the day, okay? So understand that. You're not actually down 500 anymore. You're only down 400. You're down 400 there. You're up 600 on your new position. So you're positive $200. That's how you average down. At that time, you say, okay, let me sell the out of the money options and call it a loss on that one because the ones that are in the money will react more positively if the stock goes up. All right. So that's how you even turn it into more profit and then also park some money on the side. It wasn't that difficult. Okay. You're in a position. I'll give an example. STX, it tanked the other day, 8-9%. Okay. I had no options, but let's say I did have options. When it tanks, I use double the amount of money. If I was in for 5,000, I'll put 10,000 in. Now that it rebounded and it's pushing like 86, 87, it was $80 flat. So if I bought $80 call options when it was 80, okay, and it's 86, let's just say, okay, that means they're worth probably over 150% gain right now. So whatever I was down, let's just say I was down, let's say it was terrible. I was down 90%, okay? I was down 90% on $2,000, which means I had like $400 left. Then I used double that amount. So I put in $4,000 and I'm up 150%, which is $6,000. Okay. So I lost, what did I lose? I lost $1,800. I'm up $6,000. The point is the rules work. If you average down correctly, it works. All right. Let me get back to the slides, Carlos. I appreciate that. And then let's get the next slide up there when we get a chance, please. Next slide when we get a chance. Okay. So this is my point this morning. And I posted again, you don't have to believe in my positions. You could believe opposite everything. This person was negative on the market and took all these put positions and took one contract each and was up 32, 25, 12, 11, 12%. You don't have to follow Matt. As long as you have strategy to take your position and to get out with profit, you're all good. So hopefully this person secured profit. I applaud them. All right, next slide, please. All right, Chinese crackdown continues. Oh, yeah, I was just telling you guys what to expect from China. This is pre-market again. All right, so it was like 6:30 in the morning. I never stop. I mentioned that Chinese stocks are probably going to throw up on themselves, which they did. I also mentioned during the day I took a lotto play on two of these Chinese stocks. I'm going to share that with you as well. Let's get another slide up there. All right, IGT, this is the position I sold out with 10% gain. Again, I don't leave any bag holders on my platform, and if you watch me on YouTube, I won't leave you there either. All right, now if you're in IGT, it ended the day tremendously, so I would love to be back in. I think it's 1988. I got in out at $20. I got in when it was like 1982, obviously. All right, next slide, please. All right, the entire chip industry. So I saw this at, what was it, at 10:32 when I took the picture, but this was like, what, 40 minutes in? So it was about 9:40 in the morning when I posted this, that the chip, it was just being beat up. So yeah, WDC, 62.68. I think it closed at 62.36 or something like that. So it's crazy, the bullshit that you see during the day, it just has to drop an extra 5% only to rebound 5% or whatever it was. The same with UVXY. It had to spike 11% only to retract, 6%. I mean, it opened up 5%. So it went from 5 to like 11 back to 5. I mean, it's bullshit. It's market manipulation. The buying was there at the end of the day. Let me get another slide, Carlos, please. All right, yeah. So this is what they do. EVGO, again, I averaged down. I bought some more options, $10 calls. My average was $2.05. I bought more at, I think, $1.60 today, taking my average down to $1.81. So again, my break even is $11.81. When this goes above $13, I'm probably going to make 60%. This is how I average down. My options expire August 20th. All right. There's a buy rating right there, and you guys have to believe analysts, right? Because they don't lie to you. All right, let's get another slide up there, please. All right, updated spreadsheet. All right, I'm not going to go into this, but I basically tell my members, if you're part of my platform, exactly what positions I closed, exactly how I closed them, if I accepted a loss, if I took a gain, why I closed it. All right, next slide. I don't think we're going to harp on these too long, so I will probably go down the next two slides real quick. Nope. That was a little too quick. All right, so I was just showing you guys. These are my what is this? This is stocks again. So I have like 7 closed losers, probably like 3 or 4 times the winners. My average down on Blink, which I mentioned, and Roblox, which I mentioned. I closed out D-Dog and Net the other day because I thought they could go down today. I was securing profit. Let's get another slide up there. So EVGO, again, I mentioned, there was $1.81 I averaged down. Again, I have more than enough time. So here's my exit strategy, was why I left the slide. If you're in this position, and I guess the stock is what, 11.35 or something like that, maybe 11.40 now. So the options are probably worth $1.40, $1.45. I'm looking for, where before I was looking for 290. If I had looked for 280, I would have been out with 40% profit. But I rode the elevator up and I rode the elevator down. So when I rode the elevator down, I averaged down today, okay? It was spiking this morning above $12. So it's only a matter of a few days before it gets above $12 again. And once it gets above $12, once it's $12.45, I'm out at $2.45. Since my average is $1.81, we're going to say I'm making 64 cents, which is about 35% profit. So again, the funny thing is I got greedy originally. I made 40%. I didn't average out. So when I tell you to take profit, take freaking profit, because it sucks averaging down. I tied up some more money, and now I have to be right again instead of being right the first time, which I was already right. I should have had 40%. I was looking for 50%. Let me get another slide up there, please. Red, as per my public broadcast. So again, this morning, 10:45, I went on publicly, and I said the markets could get really, really ugly. But I took my first put position. Now, what did I say? The UVXY could go counter to what my position was. If it spikes hard and I'm wrong about the markets and the markets throw up on themselves, it might go to $33. So that was my plan. If it spiked to $33, my second, third, and fourth position would have been put options at $33 or wherever it spiked to. The point is, it didn't. So I was watching, and I even told you I don't foresee that, meaning I thought the markets would be ugly. I'd see the UVXY spiking, but I don't see it spiking that hard. And end of day, it's going to end up down. And that's what my video basically said. And then what happened? That's what we saw. The markets looked like shit. The UVXY was spiking all day, and the UVXY moves fast. But at the end of the day, let's just look at it where it finishes. I don't remember where it finished exactly, actually. I thought it was, well, you know what? Let's find it. It is, there it is. At $29.38, okay? So I called it was going to finish at $30 end of day. It finished at $29.38, a whole 62 cents under the low amount I predicted, because people were saying, on the contrary, when it was $31, it was going to spike to $33. And I said the opposite. More chance $2 down than $2 up. So at $31, when everybody was hesitating, where did it finish? Down $1.62 from that point. All right. That's how you call the market. So at the same time, where I apologize to you guys and my platform members, and please accept the apology. I'm so great on calling the market, yet sometimes stocks don't react. So if I told everybody at 2 p.m., this is the only alert for today, we're going to buy the SPY. It expires tomorrow. It's a risky position. Use 1/10 of whatever you're going to do. So some people would enter in $300, $400, whatever dollars. They would have made $100, $200, $300 very quickly off some small amounts. I apologize. I will get that straight tomorrow. When I don't announce any stocks or positions before noon, because I'm either waiting for the top or the bottom, now you'll know why. I want to make your next trade profitable. All right, next slide, please. UVXY. So I'm transparent as can be. I send it out as much information as possible. I tell you when my first position is. It was $30 puts. I paid $1.80. I ended up averaging down on those on the spike to $1.45. So my 30s were $1.45. I got out with 20% profit. My second ones were $31 puts. I got in at $2.08, $2.09. I ended up averaging down to $1.91, and I got out at like $2.45. So again, I made over like 23% on that. Together with both my positions, I made 22%. All right, next slide, please. And I was in for about 36,784, I think it was, or 783, something like that. All right, next slide, please. Point was I made 7,000. We only look to make a certain amount. I tell the private members, right? Because they're talking about small piles equal big piles. They're talking about securing 20%, 30%, 40% profit on a trade. I say that adds up. You made 120 here, great. You made 280 there, add it to the 120, you're at 400. Your day is done, okay, $400. You go on to the next day. You execute 3 trades, 30, 30, and 40%. Boom, you made 564. After about a month of trading like this, very secure, very easy. You go in, you go out, you secure profit. After a month of this, instead of clearing like $280 on this trade, you're going to see your trades returning like 1,080. And then you're going to hit up a second trade in the day and make like 490 on that. When you add them together, you're going to be at like 1,500 plus for the day. You're going to say, wow, that wasn't even stressful. Because again, what my platform is teaching you is to trade without emotion, to trade with a theory, either that it's going higher or lower. All right, you know exactly how to average down if you're wrong about your position. I teach you how to enter into your position by planning ahead, whether it's puts or calls. I teach you how to average down, which is episode 37 on YouTube. Put in the time and effort, watch it. If you're here with me so far, we're almost 30 minutes in, hit the like button, subscribe to my channel. Please share it, okay? Everything Carlos and I and John and Boris, what we all do, what we all put together, it's all organic. We don't spend any money on marketing, okay? So our retention ratio is pretty damn good. And I just want to share it. I want there to be more efficient traders out there. Understand the logic of this platform or behind this platform is to make you more efficient at trading, to make you better at trading, to make you smarter at trading, to teach you that the extra 3 or 4 or 5% that you save on the way in and the 5% you save on the way out is 10%. So when you're making 22% on the trade instead of 22%, you're now 32%. If you're planning ahead and there's a spike and you get out at 32% and then the stock market throws up on itself and your position went from up 40%, okay, because we don't always sell at the top. We plan ahead and we'll take 33% and it spikes hard and you could have made 50%. Oh, so you're worrying about your 50%, and then you look again, and thank goodness you sold your position at 33% because now you'd be down 26%. So without planning ahead, you become a watcher, and when you're a watcher, you're not making money. So when I tell you to plan ahead, whether you're a rookie trader and it's your first options play, and I'll explain it real quick if you want to plan ahead, and then we'll get to some questions. You look at an option, you're like, oh, it's $1.40, okay? And you say, that's too expensive for you. I want it on sale. Whatever it is, I don't care. You say $1.40, I will put in a bid at $1.10, which is insinuating a 28% discount. If it hits $1.10 today, that's great because I was willing to pay $1.40. I don't care if it goes to 90 cents at close. The point is you're going to pay $1.40 instead of $140. You're now paying $110. I just saved you 28%. Now, the great news is if you get it and it gets executed and somehow it ends the day back at $1.40 or $1.30, like today, we saw the market fall hard and then it rebounded. So, yes, your stocks are down, but they had a nice rebound finish. So if you bought at the low, at the bottom, you put in for 28% lower, although your option is down only 10% today. Since you put in for 28% lower, the person who did that is actually up 18%. So the first-time option buyers, whatever you're going to buy. Oh, I want to buy something safe. I want to buy an Amazon contract. Oh, it's expensive. It's $2,800. You say to yourself, okay, I would be willing to spend $2,500 on this option. I'm going to save money. So you're willing to bet for, buy it for 28. Instead, you say, maybe it'll go down 1% tomorrow, Amazon, and I'll get a 10% savings. So you put in your bid at, let's say you even want to get greedier. You want to save 20%. I'll put in the bid at $2,200 flat. It's at $2,800 right now. You're saying I want to get it for $2,200. If Amazon goes down tomorrow for any blip of a moment at market open and somebody says, I'm going to sell you my option and it's all computer driven, you're getting it for $2,200. Whereas if you don't know how to trade and you let Robinhood or Webull or whatever platform you're using tell you to pay the ask, then you're losing out. And in that case, you'd be losing out on $600, which is about 28%. Notice, I'm always talking about good percentages, anywhere from 5 nibbling here, 5 on the way out, to like 28 or 30%. If you take my secrets and my cheat codes, let's call them, and you figure out how to make an extra 5, 10, 15% on your trades, and you're making 10 or 20% to start, you're going to start making 20 to 30 to 40%. When you're playing with house money, it's going to be a little more comfortable. You're going to understand the planning process, and it's paying, instead of paying $110 for the option, you're going to say, I'm even more greedy. I'll put in for 98 bucks. I know it's $1.50. I'll put in for 98 bucks. If it loses from $1.50 to 98 bucks, it's going to be off 34%. That's a discount I like. So then you buy it because it goes down. The market was shit on today. You don't even check it. You're teaching your class at school. You're picking up your kids. You're at the grocery store. You're preparing dinner, whatever you're doing, okay? Point is, end of the day, you look, and it's not $1.50 like it was, but it ended up closing at $1.38. Now, the great news is you bought that shit for 98 cents. It's $1.38. If you'd bought it at the beginning of the day, or you had FOMO, right? You had FOMO, you paid $1.40, you paid $1.35, you paid $1.30. While it was going down, you paid $1.20. The person who executes, who plans ahead, who puts in for 98 cents or $98, gets it for $98 because the market threw up on itself today. And at the end of the day, when it closes at $1.38, he's up 40 cents or $40 per contract, which is 42%. So the dude didn't even do anything, or the lady didn't even do anything. We don't discriminate here. Equal opportunity. Anybody can invest. Anybody can have a brain. Anybody can plan ahead. The point is, I don't give a shit what you're looking at. You're looking at AAL options, American Airline. Great. It's $2.80 for whatever option you're looking at. It expires August 20th. You have more than enough time. You say to yourself, all right, I don't want to pay $2.80. I want to pay $2.12. I want to save 68 cents on it. I want to save 30%. Now, if no one wants to sell it to you tomorrow, you don't have it. The good news is, if AAL dips tomorrow, instead of paying $2.80, you just paid $2.12. You just saved $68. You get it? You either get the deal or you don't, and there's always the next trade. So again, pay it forward, share it with someone. I'm going to get to questions, see if I can help you guys along. All right, let's see what questions we have today. So again, if you're getting value here, I haven't said that yet, please give me a thumbs up, like the video, subscribe, and if I did say it, that's because I'm forgetful, okay? Oh, I wanted to add this real quick about the market. So it's like everybody has the worst short-term memories, okay? Yeah, before we get to the question, the worst short-term memories, because we just had 5 straight green days. 5 straight green days, and they're talking about today how it was going to be so scary, how it was going to fall, how the market's going to tank, how it's going to capitulate, how tomorrow's going to be worse, the Fed's going to speak, we have inflation, the Delta variant is spiking. Yes, we saw the market doesn't give a shit. What we saw today was manipulation. It was fear selling. It was selling at open, compiled by the retail trader. 30 million traders out there who don't like to day trade, who are looking at their phone saying, Tesla was off $24 and I better sell my position. And then what happened once they sell? The institutions bought that shit up and Tesla went back up. Now, I don't know where Tesla finished, but I'm thinking 644 it was at, and I know it was as low as 617 because one of my members reached out to me and he was into some Tesla options. He said, I need help. I need help, Matt. I'm in. I paid $23 a contract. It's currently like $6 a contract. What would you do? Well, I didn't have time to answer him because I saw two ladies reach out on Twitter and we have a new platform. But I told him, what would I do? I would buy 2 contracts at $6, let's say. So you're in for 23. You buy 2 more for 6. You're at $35, which takes your average to $11.66. So now you have 3 contracts, $1,166 per contract. When Tesla was making the move and we were actually finally talking, okay, it was up to like 640. I said, dude, you're already late. It just moved $4 and it's probably going to move another $4 or $5 up. But now since it moved, you're going to be paying a lot more money to average down. And it's just crazy. We average down when the shit looks the worst. I'm a contrarian. So when people are throwing up at the market, unless you think it's dropping straight down to the ground to hell, then it's probably going to bounce back up. Same when it goes up. We know the market doesn't shoot up 2,000 points. So if it's up 350 at any point tomorrow, the next day, we sell off a little, whatever the point that it's up, you know. All right, so thoughts on Square. Okay, I almost sold Square today, and I thought wiser of it. I zoomed out, okay? So I got into Square at $231. I saw it was as high as 260 something, and then it pulled back because Bitcoin pulled back a little and tech pulled back a little, but I'm not worried about it. NVIDIA, I'd be more worried about. NVIDIA moved with AMD, so let me look at Square real quick just to give you a price target. I think my price target on Square was like 300, which is funny because PayPal right now is at 300, and if I had a price target on PayPal, I think PayPal is going to go up higher too. We all know I like coin as well. So Square right now is 249 and a quarter, no, 250. Okay, so it's around 250 flat, let's say. Yeah, I mean, I think Square is going to go up another 20% before I'd be worried about it, about taking profit. And it will move with crypto, and same with PayPal will move with crypto. Let's look at NVIDIA. Now, NVIDIA's had a hell of a run, and then I think it's split. I know there had to be profit taking, so I'm going to look at the 1 month of NVIDIA because there's been selling 5 out of the last 6 days in NVIDIA. Now, it could be profit taking, and people are waiting for it to go higher. So if tech is strong, NVIDIA will be fine. If tech sells off, watch NVIDIA, okay? But also NVIDIA runs with the same crew. NVIDIA, Micron, AMD, STX, WDC, TSM, you know, all the chip makers, Taiwan Semi. So right now it's tough. I mean, you've had 2 out of the last 10 days have been inflow days, and the stock's holding its own. So what is that telling you when the market's actually strong? Which means we've had 8, you know, I mean, the market's been pretty ugly. All right, so it's telling me if the market's strong, NVIDIA will react well. If the market's weak, it seems to hold its own. All right, let's get another question up there, please. Woo, hot today. All right, T. Pharaoh Music, how is it, buddy? All right, how can it be possible for a stock to be market an inflow day if the price? I've explained this before to my platform, but I'm glad you asked because it is confusing, okay? So the stock has great news, okay? Hey, we just created a drug. It's going to save the planet. So the stock goes from $8 to $16, okay? You get it? The stock went up, but how can it be an outflow day, okay? It's an outflow day because people are unloading their shares. Oh, I don't want this. It's shit. You know, I don't want it. I'm taking my profit. So they're selling for the bid, okay? So that's how a stock goes up on an outflow day. Now I will reverse it for you. A stock reports earnings, okay? They say, STX says, we crushed it. We have huge demand. And Wall Street says, we're going to lower our earnings on our estimates on STX, the stock, to like $60. And all of a sudden, 200,000 shares force the stock down to whatever it is. So people are acquiring it. It's an inflow day, right? Because people are acquiring the stock, but it's already down like 7-8%. So it's down, but it's an inflow day. People are acquiring. Anytime a stock is off, like STX, which I mentioned the other day, and you can look at the chart, inflow day, inflow day, inflow day, inflow day. That's why I like that chart, and that's why that's my favorite semi right now. All right, let's go on to another one, please. Microsoft and Apple's didn't do much after hours. Would be puts be good for tomorrow. So puts are good for tomorrow if you think tech is going to throw up on itself, and some people did. So I mentioned to my platform, we'll be trading more ETFs. So I'll explain the ETFs to everybody here and everybody that watches my video on replay, okay? You have the UVXY, which is volatility in the market. We're not going to worry about that. We're going to worry about market direction. If the NASDAQ is strong, the SQQQ goes down. If the NASDAQ is weak, okay, like you saw today, the SQQQ shot up. So I believe the SQQQ was like $8 and like 15 cents, 11 cents, and it probably went north of like $8.50. People were buying sweeps of call options, meaning they thought tech was going to continue to go down. But they also thought the market was going to throw up today. They also didn't think the market was going to rebound at all, which it did. So let's just find out what the market finished at today because I don't even remember. Let's get back here. Square. No. Okay, here we go. The market today. The Dow finished off. What is that right? 85 points. And the NASDAQ was off 180. What was my prediction earlier today? When the markets were sickly down, yes, I made a prediction. The markets were down over 300 for tech, and I said it would finish 177 to 188 down, okay? It finished down 180. So that's 140 points. The market's throwing up on itself. That's why I'm apologizing to my platform members, because when I make a prediction like that, instead of bragging about that prediction right here, we should be making money. So if we bought SQQQ puts when I called that the market was going to reverse, boom, we would have been 40 or 50%, which is what I did a video before and I told you guys. The same is true for the UVXY. That's why it dropped down. Not a surprise. The same with the SPY. It closed at 439. It was 436.5. It went up $2.50, which with the SPY, that's pretty significant. So we could have made about 55 to 58%. Okay, so I apologize again. I will be holding on to my alert or my trade or whatever it is. I'm going to call it one day trade or one alert. I'm going to save it for tomorrow, okay? At some point tomorrow, when I think we've even seen the worst of the worst or we've seen the best of the best, I'm going to give out that trade and call the direction of the market. Whether I think tech's going to throw up or accelerate, whether I think the Dow's going to throw up or accelerate north, right? I'm going to let you know. I'm going to let you know the exact position. I'm going to let you know what my bid is and how we're going to get in. And we're going to score that 55% tomorrow. And then I'll just feel better because I won't feel like people don't know what to do or average down or they're scared to average down. Like my Tesla friend who was worried about $2,600 or $2,300. $2,300 was down to $600. So he was down $1,700, which sucks because no one wants to be down 60 or 70%. But when you're down and things look the worst, if we had spoke, buy 2 contracts, it looks like shit. Great. It rebounded 40% from that $6 figure. Actually, it's probably like even 50%. It's probably $6 to $9 now. The point is, if he averaged down, he would be down like 22% now instead of 60%. Huge difference. All right, I haven't looked at Apple or Microsoft after hours, but the SQQQ is spiking after hours, which means obviously tech is throwing up after hours. The UVXY is probably spiking a little. Now, you have to see what happens tomorrow. So let's understand that. With COVID spiking, if the Dow is not going to throw up on itself, which it certainly could, and tech continues to throw up on itself, that would mean the UVXY will spike. That'll mean the SQQQ will go higher. The SDOW will go higher. But again, I'm going to gauge market direction. We don't have to do shit tomorrow until like, I don't know, noon, 1 o'clock. We'll look at the market. It's easier to trade and to make one winning trade. So please trade your own positions accordingly. Go in and out when you think you see the best opportunities. Secure profit, but understand that tomorrow I'm going to look for one single trade that I'm going to try and make 40 or 50%. So when you watch me on YouTube tomorrow or you're watching me today, come back tomorrow. Find out who I did because I'm transparent. I'm not giving out shit. I'll make sure everybody has a chance to get in. I'll make sure everybody can call the dip. And then hopefully I'll be right about the direction. And the market will either reverse or follow through with a shitty day. And we're going to make money. Let's get another question, please. Thanks for the update. Hey, Matt, I've told you this, Mr. Bacon, dude. 2 T's in Matt, 2 T's. Juicy Bacon here. Thoughts on Ride or Workhorse? Let me check them both out for you, brother. RIDE. Okay. Let's check out Ride. Ooh. Oh, God. Oh, I didn't know it was this bad. I don't have Ride on my watch list, but I will tell you that the last 2 days are significant volume, and there was significant sell-off. Today it was down 9.6%, down 7. I would not be jumping in, okay? Now, there could be a green day where someone's trying to call the bottom, and it's reversing, and I know Ride probably seems so damn cheap at $6.60, okay? But I would stay away. I mean, I don't know. It looks, this thing says it's reached critical level. No shit. What's going to happen if Lordstown loses or has bad news and they fall 20% in one day? It'll go from 660 to 520. And then it'll go to 550, 510. And then before you know it, they'll be declaring some shit and it'll be in trouble and it'll be considered an OTC blue book stock. I would stay the hell away from Ride unless you want to take a negative position on Ride. You can take a negative position on Ride and hope it goes down. I mean, I wouldn't. I don't like being negative on any companies. If Ride goes out of business, you lose jobs. More people enter the unemployment. All right, now Workhorse is different. Volume's crazy low, and it's been crazy low since July 7th. Inflow, outflow days the same. It's just reacting with the market. And until there's some type of spike for Workhorse, like they have some good news or a catalyst, or maybe Biden passes that infrastructure bill and it says something for EVs and other vehicles like that, other groups. Volume is kind of low again. 5 million. Let me look at the 3-month chart. I know what it's going to look like. I mean, it could definitely be consolidating. Let's remember, Workhorse was in the $9 range, spiked all the way up to $17, and now it seems to be holding its own somewhere between like $10 and $12. Right now, it's $11. So if I had to choose between the two, Ride is the riskier, both on the downside and upside. Workhorse would be the safer. Like if I had to put money and hope that it was still there in next June and then maybe it doubled, I would definitely go Workhorse, and there's a chance Ride would like be bankrupt or something. I'm not on the institution side, but they might win, with Ride. I mean, it looks like shit, that chart. All right, let's get another one. Matt with 2 T's. All right, please hit the like button. There it is right there. Hit the like button. All you got to do is push it on your computer. Like. GME is so interesting. So before I look at the chart, and I thank you for the $5, Carlos will be eating pizza tonight. I will be starving. So Jumia, it moves quickly. Pre-market, I noticed this morning, it was up 2.5%. When the market started telling you it was going to sell off, still pre-market, it was down 0.5%. I'm going to guess that Jumia went down as much as, I'll say 4.5%, but maybe 5%, but I'll say 4.5%, and then rebounded at the close of day to maybe 1.87% down. All right, always make guesses. All right, so it's going to move with the market. It's a volatile stock. I do see demand for Jumia. Oh, look at that. It fell 4%. Was that, whoa. Oh, man, it was even down more, huh? It was down another $1.50. What was it down, like 12%? Did you get in today when it dipped that hard? I didn't know it dipped that hard. Holy shit. It dipped hard at open. It opened at 22. It opened at 22.37, okay? It closed at 21.53, okay? So, yes, it lost, 4%. It dipped so hard, and since it dipped, which happened at like 11:30, heavy buying. So, yes, I like Jumia. If you got in there on the cheap, because, we plan ahead. When things look the worst at like 11:30, if you're buying. If not, say you were hesitant to buy, and then you see the dip at 1 o'clock. And since 1 o'clock, it's had a nice line up. So you had two opportunities to buy a magnificent dip in Jumia. Yes, I like the chart. Let me give you a price target on that one, okay? Where are we going to go on that one to back here? Yeah, I mean, it's not going to amaze you, but I'll say 24.25. And I'm going to say you need a decent market. If the market throws up on itself, so you need a stable market. And I'm going to tell you it's going to be 24.25. All right, $24, 24.25. Yep. So that's up 275. That's at least 10, 11%. All right, next one. I guess it threw up, so hopefully you got in. Mr. Matt, I'm taking the new platform. Thank you so much, bro. Thoughts on roadblocks. Okay, perfect. Why am I excited? Because I messaged out today to the platform when Roblox was like $71.90. I'm buying more Roblox. So I bought 200 more shares of Roblox. It was $72. I'm going to look at it right now. I'll look at the chart because I didn't look at the chart. I just knew I liked it, and I thought it was a steal at $72. I couldn't believe it. Heavy selling today. Maybe I shouldn't be bragging. I did go to 71.96, so I was right around the bottom, which is perfect. It's at 76 now. Okay, when I averaged down on my $85, and then I bought the 72s, were 13. I'm at 78.5. So I'm still down $2, which is probably like what? It's not killer. It's what, 3%. Heavy selling off, but again, people are thinking tech is going to throw up. So here's a great example. If tech throws up on itself, Roblox might go back to 67 over a couple of days. Now, tech would have to be throw up. I don't see that happening. We're still at like all-time highs, yet this stock is off it. There's been heavy selling. Weaker hands are out. I happen to like this stock. I would not be surprised if it bounced hard to $80 or $82. Yeah, so your number right there figures in $80. Yeah, see, that's the problem. See, this is where the nerves get you. If you're trading off experience and you say to yourself, I bought this, I paid $1.97. Okay, here's what you should have done, right? When it was down to $72 today and I said I was buying more of this, okay? You wouldn't average down with the 78. You'd buy the 72s because we're at 72s. You probably pay $3. Now that it's at 76, those $3 ones would be worth $6. You'd make 100%. These ones that you're down on, let's say you could be down on 20, 30%. If you're up 100 and you're down 30, I know you didn't ask me about that. You asked me my thoughts, but I'm telling you, if you were in this today and you paid $1.97 and it was dropping hard, you should have bought 2 more contracts, or you should have bought 1 contract that was more in the money and doubled your investment. If you paid $1.97, you paid $400. So you'd buy one for $400. When it rebounds like it did, you'd be making 100%. So that would be my plan. Now, what do I think of the chart? It's hard to tell. Again, if NASDAQ throws up, this is going down. If NASDAQ bounces, which I see support for the NASDAQ, I see more support for the Dow, which is crazy because we're all experiencing the virus. And some Dow stocks are throwing up like Wynn Casino, right? Under $100, something like that. But there are other Dow stocks that are strong. So when I talk about Dow, I'm not talking about airlines and cruise ships. I'm talking about other components that make up the Dow. Okay, let's get another question up there. AMC, I haven't answered an AMC question in a while. I haven't looked at AMC in a while. I'm scared. I'm afraid it's going to be $34, $33. Where is it? It's not pulling up. Why doesn't it want to pull up? It's pulling up, just not the price is pulling up. AMC, up $38. Okay. Oh, I guess it was as high as 40. That's great for you guys, but I would be surprised. Again, AMC is going to move with the Dow. So we had 5 straight good days, which got you from AMC at like $32 or $33 up to $40. Understand, that is a 20% move, okay? So like any other stocks, because you can't think AMC is special. There's no squeeze coming, all right? So it's going to move with the market. As long as people think there's good investment there, it will move with the market. However, understand this about AMC just in general. The company was worth like $4 billion pre-pandemic, and now the company is worth $19 billion. So pre-pandemic, let's say it was worth $5 billion. It's worth 4 times as much now that less people are seeing movies and then movies are being streamed. So I understand if you're there to support the cause. I understand if you're there because people still tell you there's going to be a squeeze. But I've been saying this for months. When AMC was 72, get out. When it was 67, get out. When it was 52, get out. At $37, on its way down to 32, I finally said, if you were out at 52, you can buy back in at 37, although it would be better to buy at 33. Well, it got to 32. Right now, it's going to move with the Dow. So if you think the Dow's going to throw up and oil's going to throw up and airlines are going to throw up and cruise ships are going to throw up and the Dow's going to throw up, you do not want to be in AMC because it'll go back to 32. If you think airlines are going from like $16 to 18 to 20, Carnival's going from 22 to 24, your AMC will go to $44, $45. So that's great. At that price, I would take profit. I would let it consolidate again to $38, and then I would buy the same amount, or I would buy 20% more because I sold it $45. I'd buy it $37, and I'm safe 20%. So instead of 100 shares, I'd buy 120. Instead of 1,000 shares, I'd buy 1,200 shares. Understand, you're supporting the cause with more shares. If you had sold at 72 and you'd bought at 36, if you had 1,000 shares, you could have bought 2,000 shares. Talk about supporting the cause. More shares off the street. Let's get another question in there, please. Okay, July 30, SPY calls. Thanks. Oh, lifetime member then, because that's who got the SPY calls today. And again, I stay out of the lifetime chat because these people are very smart and they have some group leaders, which is great that people step forward and give their advice and give their help and give their strategy. Hey, I'm entering in here at $68. I'm going to exit out at $1. I'm going to make approximately 42%. Again, lifetime members. Okay, if you want to be a lifetime member, there are no openings. I'm not teasing you. Please email support at 349trading.com. We have a wait list. I think it's 13 strong. Instead of opening up lifetime members, I think I'm going to wait for it to get to 20, and then I'm just going to exit out again. We'll add those 20, and then we'll be on hold probably forever because one of these days, the platform is going to explode. We're over 1,000 members. I'm expecting that Carlos does his job and we get to 5,000 members and then 10,000. Yes, you, Carlos. I want to teach these people how to trade. So if you're watching right now, pay this shit forward. Share it with somebody. All right, my rules work no matter what position you take. I love the dude that went opposite me on one of my positions, and he said, dude, look at your rules. I used this. I averaged down. I secured profit. I said, dude, I use my rules. I averaged down. I secured profit. So he went one way. I went the other way, and we both made 40%. Congratulations. My rules work for any type of positions. Yes, I'm not a financial advisor. Do your own due diligence, but subscribe anyway. All right. Let's get another one. I should have bought McDonald's calls, but no, instead I bought chicken nuggets yesterday. I always buy the wrong shit. That's some funny stuff. Yes, we're all funny, but I won't even look at McDonald's unless you ask me to. Hey, Matt, my thoughts on Qualcomm. Looks like tomorrow is supposed to be an inflow day. They have earnings. You guys know how I hate earnings because the crazy thing is a company will report great earnings. Oh, Tesla. Did they report over $1 billion for the first time ever? $1 billion, 98% over last year. They over-delivered. What happened to Tesla? They sold the shit out of it today. It was down like 6, 7. I don't know. It was down tremendously. So, yes, you could be correct about earnings, and then you get screwed. I mean, it's crazy. Okay, let's go here. After hours, Qualcomm. I don't worry about earnings. In fact, earnings upset me and scare me unless they crush earnings. Now, who crushes earnings year after year? Well, I'll tell you, Facebook does. Facebook usually comes out, you're supposed to earn like $8 a share, and they're like, we earn $23 a share. Then you're supposed to earn $15 a share, and Facebook comes out, you're like, we earn $28 a share. I mean, that's crush. When it's like 15, which is a pretty freaking high number because it's quarterly, and they crush it at like double that, it's pretty sick. Okay, Qualcomm, I remember when this was $120. Now it's $141. All right, so yeah, back in May it was, yeah, there it is. All right, so it looks nice. If you look at the chart, let me see if I can show you. See the pyramids? So it's halfway down on the new pyramid. Here's the point. If Qualcomm's going higher, which it does, charts like that, okay, it's going to stop at some point. I don't know if it's done already because it's had 2 straight days of selling. Oh, I see what you mean. It doesn't really go more than 2 straight days of selling before they start buying. That's why you say tomorrow should be an inflow day. Yes, so you're probably correct. And if it doesn't happen tomorrow, I think Qualcomm will probably have an inflow day the next day. So if you get the good news and Qualcomm's off another $2.50 tomorrow and it's at 138 flat, you could be buying it because the next day it'll be over 140 again. Yes, it's like 140 and 93 cents. So if it happens to sell off 2% tomorrow, it'll probably gain 2% the next day. That's a good observation, Diego. I tell you guys, look at charts. Find me some patterns, right? 5 outflow days, 5 inflow days. Oh, market reversed today. What a shocker. Nothing goes straight up. Nothing goes straight down. Let's get another question up there, Carlos. If you're still with me, which a lot of you are, hit the like button. I know how many likes there should be. Oh, for the 6 people that like to beat up little kids and hit the dislike button, that works for me too because analytics get me shown to more people, all right? So dislike me all you want. But I am transparent. When I make good trades, I share. Oh, I didn't mention this at the beginning, okay? So 5 market days, 4 market, whatever. I had 6 straight winning days. So I am 6 in a row, okay? Now, I'll mention this because every day when I get on here and I say it's my 7th, 8th, 9th, 10th, when I'm at like 25 straight winning days in a row, somebody might start paying attention to my picks again because my picks are damn good and I've been on fire. I get you guys are going elsewhere and you're like, oh, shit, I bought this. It went down, whatever. My picks are on fire. If you're averaging down the right way, if you sell and buy back the dip, if you're doing the right things, you're crushing it again. And I've been crushing it now for 6 straight days. Yes, I got a little preoccupied with the UVXY today, but who won again? I did. I didn't even take it when it went down to 29.36. I exited out almost 80 cents higher, and I made 22%. If I got the extra 80 cents, it's going on my spreadsheet, max profit. If I got the extra 80 cents, let's say I got the extra 50 cents, you're talking about probably another 30%, maybe 40%. Oh, God. Okay. VRSN calls. Hey, Ed, how you doing, man? So I appreciate you guys coming back. I notice the same people over and over again. So I appreciate it. Don't think you guys aren't appreciated. I know I wouldn't have this. Well, I would still talk to myself. Okay, VRSN. Oh, my God. This looks terrible. Even though there was buying yesterday, it still looks like it's throwing up. I don't know what happened, but the fact that it went from 230 something in 2 days later, oh, they had earnings. Did they kill earnings and then they sell off? So if you're in VeriSign for calls, let me just look. Yeah, you're probably going to have some resistance right here. I think 219 is probably around the right area, which is probably why it went down there. 217 and bounced. Again, NASDAQ goes down tomorrow. It's going to lose another 2%. It'll be 215. NASDAQ goes up tomorrow. This is going to bounce pretty good, 224. So it's up to you, Ed, if you think the NASDAQ will be strong. So here's an observation you can make, okay? The Fed is speaking at 2 o'clock tomorrow. Whatever it is, the market will probably worry from 11 a.m. to 2 p.m. The market will probably drop for that 3 hours. So if you're with me this whole hour, congratulations. You just got the secret. If you didn't figure it out, remind yourself. The market will likely drop from 12 p.m. to about 2 p.m. When the Fed speaks at 2:30, depending on what he says, you could see some buying. So you could see an exact same day that we had today, meaning the market opens. Oh, God, looks like it's going to reverse. Oh, fake out, because the Fed's speaking at 2:30. Oh, the market's dropping. It's dropping. Oh, the Fed's speaking. They're saying shit we don't like. Doesn't matter. We're buying the market, and the market is spiking again. So that's the shit that happens. Market manipulation. Those calls, you got to decide on your own. Carlos, you know what's coming, bad boy. Show me it. All right, let's get another question up there. Oh, what are you telling me? You should like this. Yes, like, subscribe. I'm having the best day today because you know what? 80 people, 180 people, 600, 6,000. I don't give a damn. I now do this for myself. I share it to make you more efficient. If you put in the hours, then you don't care that I ramble on for 30 seconds here or there because you appreciate the lessons. If you don't, that means you don't understand the lessons and you just don't give a shit. So you don't give a shit. I don't give a shit. You put in the hours, you're going to get more efficient. So I know one of my videos is going to go viral, but other than that, I'm going to tell you to like the video. I'm going to tell you to subscribe. I'm going to tell you to try my platform. Do I think APT will go up again? I had success on calls. Okay, First, when you find a stock or an option that you like and you're winning against it, and we had Romeo mention today, I forgot, American Express, AXP. He mentioned it doesn't have more than three outflow days in a row. So every time it gets to like down 3 days, he buys some, and he's like 3 for 3 or 4 for 4 about it. All right, so if you have a favorite stock, that's awesome. All right, APT. All right. Oh, I don't even know this one. Alpha Pro Tech on the Amex. Crazy heavy buying lately in the last 3 months, but specifically in the last, couple of days. Oh, yeah. I don't know the stock. It had crazy inflow. I mean, if you're telling me that there's going to be demand for this, then yes, it could probably spike another $1.60 to $2. It would spike to like $11.80. It's at $9.70 right now. So to go from $9.70 to $11.80, again, I don't know what that is. I'm just basing it on the chart. If you tell me you get another inflow day like yesterday, the other day, $7.19, then yes, this stock will spike. I don't want it on my watch list because I don't know what it is, and it already moved pretty damn good. It moved 3% today. All right, quitting time. Thanks, everybody.